everyone has been losing money in this market, all right? From the high that Bitcoin set down to the low, it's been a 27% drop, but it's been way worse for other coins, right? I mean, if you look at it week over week or month over month, there have been some massive losers all around the space. A lot of names that you guys are actually familiar with, even if you're in the safer assets. And I understand that's actually been very demoralizing for a lot of people, but what you need to know, and you're going to know all about this by the end of this video, is that there are still phenomenal ways you can make money in the crypto market today that I'm going to be showing you right here in this YouTube video. And the thing is that if you bought, for example, Bitcoin at this high, you'd now be sitting on like $7,000. If you bought it with 10K up here, you'd be sitting on like 7K now. With some of these alts, you've lost 50% of your money in the last month. It's just been absolutely crazy, and it's very, very hard to recover those kind of gains. I'm sorry, those kind of losses. But what I'm going to be showing you in this video is something that I've actually personally been doing for over 6 years now in this market. It's something which many, many people have had huge success with, even on this channel, inside of the programs that I've been running here as well. And it's where you can actually make money while the market goes down. Now, the thing about this video before we get fully into it is that I have no secrets here. I'm going to be spilling it all to you. I'm going to be telling you absolutely everything that I know. This is something that you're already very familiar with if you're subscribed to this YouTube channel. And all I ask in return is that you smash those likes up. You make sure that you'll subscribe so you don't miss out on this time-sensitive content. And of course, as usual, there are going to be some people that kind of don't really know what they're talking about. They think that maybe, some of this stuff is fake, but I just want to show you a live view of my Bybit account right here, where I'm sitting in over 1,600% profit on my Bitcoin position, and below that, I'm still sitting on 674% on my Tron position. And I can, of course, interact with the app. This is all super live, and I want to show you how these kind of things can be pulled off in this market. Was able to buy some pretty cool toys. This was actually me in front of my house in London that I grew up in when I was super poor. Life is very different back then. So not all of it was made by trading. I want to make that super clear. I'm not some fucking prodigy that put 300 into the market and turn it into 10 million or something like that. I wish I was, but that's not me. But trading was a big part of it, and I want to show you exactly how money can be made in markets like what we're in right now. And the first thing to keep in mind is that this is all kind of based on if the market is actually trending down, right? I mean, if the market is trending up, the same principles will apply, but it's all going to be in reverse. And so the first key thing that I want to do is kind of look at Bitcoin right here, and I'm just going to go ahead and actually take a completely naked chart with you guys, so that we can really analyze this thing for what it's worth, without actually kind of getting swayed by, anything that is potentially confusing. And actually, before I continue on in this video, I do need you guys to know that I'm going to be focusing on the Blowfin exchange. This is a no KYC platform, which means that you don't require any ID or pictures of yourself to sign up and start trading. There's a tutorial I made on this platform, which is absolutely great. You can get up and running within 2 minutes. So just pause the video here and get on. I'm already signed in on my side right here, and you have thousands of dollars in bonuses when you do take advantage of my link in the description down below to Blowfin. Also huge offers, and always be mindful of your country's local regulations when you trade any markets. But if we do continue on here, the first thing that I want to do in a downtrend is first of all kind of identify that we're in a downtrend, and there's two key ways you can do that. The first way is kind of looking at where our highs are, and seeing if we're generally kind of setting lower highs in the market and lower lows in the market. That's going to be a very obvious sign that we're in a downtrend. And then number two is kind of just measuring the drop, right? And if you're seeing a big drop, kind of, some people believe that, more than a 20% drop is a bear market. Some people will say more than a 30% drop is a bear market. There's a lot of different ways to tell. And it doesn't really matter. But while this may seem obvious, it's important to have some definitions, because you don't want to be shorting prematurely. The third way to tell if you're in a bear market, and my favorite way, is to actually look at just important levels in the market and ask yourself the question, have we lost these important levels, right? And in this case, I think we have. I think $60,000 for Bitcoin is a very important level in the market. Depending on when you're watching the video, it's going to look different. But this is a very important level in the market, and if we are able to kind of hold this level as support, maybe even get a deviation like this, we're good. But if we're losing it once and then losing it again, and maybe we recover it, maybe we don't, but we're still kind of below the level, then to me, that's not really good enough, and that can definitely start meeting some definitions of bear markets. And that's actually very useful as a first kind of port of call to start from, because it tells us where we can start taking some positions on. Because one of the most basic things that we understand as analysts in this market is that you can actually, expect that previous areas of support will become new areas of resistance where the market can actually kind of pull off price action that looks something a little bit like this, right? Where the market kind of does this kind of price action. We've already done it up here. We actually had a very, very similar bit of price action at this particular price zone, where you can see that the market was previously kind of using this particular zone for some support, and sometimes it was small, sometimes it was a little bit bigger, but this particular zone did end up flipping and turning into resistance, just the same as what we might be able to expect over here. So this is a super basic kind of tenet of technical analysis, but it's very useful. It tends to serve me very well. It's actually the main thing that I use in my trading. In fact, you can close the video right here and you've known everything you need to know as far as I'm concerned to have a very, very good start. But of course, we're not going to end it there. There's so much more that I'm going to be going through with you in this video. But this is a really, really nice start because we can identify that, you lose a major area of support. And, by the way, we can define it as major just by looking at there's a long way down if we lose this zone of support, right? I mean, where is the next zone of support? It's probably going to be this kind of sideways range, or maybe this this support level down here. But in any case, I mean, from this zone down to the next support is 14%, or the next support below that is 27%. Those are big drops, right? And so, you don't really want to be kind of just hanging on, hoping that the market's going to recover. You want to start getting real and understand that actually, there could be a big drop before things start to turn around. But again, that's completely okay because it does start to show us that if the market can come back up and kind of meet these particular price zones, then we're going to be in for something very, very exciting. And so this is actually a really typical kind of example of something that I'd be interested in taking a look at. Now, another thing that I might do is actually I might take a look at some indicators that show me some resistance. For example, I've got the beautiful Ichimoku cloud, which you can find by clicking on this indicator tool up here. There's actually a tutorial that I've made on the Ichimoku cloud, which you can find by typing this into the YouTube search bar, or again, looking down in the description below that like and subscribe button. And this is a phenomenal indicator, which actually allows me to start building up a little bit of confidence, right? Because I can see that there's this kind of pre-existing horizontal level that I was personally already anticipating, and now actually coupled with a 4-hour Ichimoku cloud. So I've got some really nice kind of confluence building up here already, and we're only like a minute into the real form of analysis here. I can take this a step further and I can look at this on the daily time frame, and I can look at the EMA exponential ribbon. So again, that's something you can find by clicking on indicators, and you can just type in 4 flies ribbon, and it will actually come up. I've actually published this for you guys myself. And you can start to see that if the market takes, a couple more days, these lines are clearly trending down. They're probably going to keep on trending down. And these are both indicators, the EMAs and the Ichimokus, and anything else really, where you can tend to expect kind of bounces coming, if you kind of bounce off them from lows, or rejections happening when you rise up to them as resistance, right? So again, it really kind of helps us start to build up confluence, and it also tells me that this is where I might be able to start taking advantage of the market. And speaking of taking advantage of the market, again, with that Blowfin link down below, what I'm actually going to go ahead and do here on this phenomenal platform, and like I said, by the way, no KYC is a big deal. A lot of the exchanges these days that don't require it are really shady, not the kind of places that you'd want to trade on. You might think that Blowfin's the same. Obviously, you got to do your own research, but I think they're pretty cool. And what I know is that they don't actually white label their technology, so they've actually built it themselves, and that's a really big deal, so everything's kind of theirs, and I think that really makes a big difference. But we can bring it on to Blowfin here and start talking about how, for me, this might translate into a trade, and I'll show you many more examples of what I would do in this market right afterwards as well. But the first thing that I'd be looking at is potentially, just kind of grabbing my short tool right here, which you can find on the left side, just off screen right here. And I might actually just kind of measure, for example, I think a good stop loss would be above some of these wicks right here. It clears a big kind of zone from where I'm entering until where I kind of anticipate exiting. It gives me a nice kind of 4.6% gap where I could be invalidated, and I'd probably want to set a target down at the next zone of support, right? I'm keeping it super simple. I'm just playing support to support. That's as simple as it needs to be. Trust me, you don't need to go much deeper into it than this. A lot of other people will, but my answer to that is that those people who kind of start going crazy with it, they are just compensating for skills that they don't have on a very fundamental level. I've learned all of the complicated things as well. I've spent a lot of time looking at all of this stuff, and I know that this is not necessary, and I keep it this simple when I'm moving hundreds of thousands, if not more, around in the market. I don't do it with anything more than what I'm showing you in this YouTube video You really don't need it. The only time where you need the extra stuff is when you're bad at the basic stuff, but you can't be bad at the basic stuff if you watch this content. So that is absolutely great. And that's the kind of position that I'd be looking at taking on. So I can see my entry there is going to be at basically smack bang $60,000. I don't really want to enter at 60,000. You know, I think a lot of the time what I like to do is actually kind of, you know, enter a little bit lower than the key level or a little bit higher, just to make sure that I actually get the fill, you know, just in case someone tries to front run the market. And obviously the, you know, the steps to get signed up on Blowfin, you know, it's just going to be that the sign up link will take you here. As soon as you make your deposit, you know, you will be able to see your funds up here in the assets tab. And if you go ahead and move them over, you'll be able to start trading with them. So I'm going to show you that right now. I've got about $13,000 in this account right here. And if I just go ahead and click transfer, I can move this from my funding account, which is where it's going to be when you deposit, to my futures account right here. And let's say I just want to put in for now $1,000, right? I don't want to go crazy. Let's say it's my first time, a little bit new, you know, so I've gone ahead and moved that into my funding account. And if I come back up over here to the futures tab, this is where the action happens. This is where the magic happens, as they say. And if we go ahead and switch on dark mode up there, because we don't need this nasty white screen that's just cut off on the screen, but you don't need to see that. The first thing I'm going to do is make sure that I'm using isolated leverage, and I'm actually going to come back to the chart and just kind of see what loss I'm looking at, right? For me, typically, I don't want to lose more than kind of 20-25% on any position that I trade. You know, and so for me, this is quite a comfortable kind of 5x leverage position. I'm looking at a 4.6% loss, so I can actually leverage this up with 5x. So 5 times 4.6 puts me at a loss of about 23% right there. So I'm happy with 23% loss. You know, I think that's right between my kind of 20 to 25% rule. And really what I'm doing here, it's really interesting the way this works, is I'm basically immediately buying a bunch of Bitcoin at this price level 5 times more than I'm putting in. So, you know, if we come back to the platform here and I type in, I don't know, I can actually use the slider and I can select any price. I'm actually going to go ahead and select limit and then fill in a price of, let's say 59,950. So like I said, just below that 60K level, I can go ahead and decide, you know, I'm putting 25% in. It's going to calculate that my cost for this trade is about $250, which is 25% of my available balance. You know, and I can actually just kind of punch this in here. But you know, when it comes to these kind of things, the way this works is going short specifically is I'm actually buying, you know, whatever, $250 worth of Bitcoin times 5, so 1.2K worth of Bitcoin immediately, and then selling it immediately. So I'm actually keeping that money, and then I'm actually able to buy back those same Bitcoins, right? So let's say that I buy 10 Bitcoins up here and I immediately sell them. You know, now I'm in debt. I have to pay back 10 Bitcoins, and I can buy those 10 Bitcoins at any point. If I wait too long or if the market goes in the wrong direction, I'm going to be forced to do it. So for example, at my stop loss, where I stand to lose 23%. But let's say the Bitcoins get cheaper, right? Let's say the Bitcoins get 10% cheaper. Well, all of a sudden, you know, I can actually buy those Bitcoins back 10% cheaper, but they're not going to be 10% cheaper. They're actually going to be 50% cheaper because of my leverage. My leverage is 5x, right? So my reward is also multiplied by 5. Not only do I lose 5 times more money, but I also make 5 times more money. And that's where this gets really, really interesting, because if you think that the price can actually go back down, then all you've got to do is just buy back those Bitcoins that you owe to the exchange, and you get paid the difference, right? So that's really, really cool. If you didn't understand the mechanics of that, that's completely okay. You really don't need to. You know, I didn't understand it for way longer than I would care to admit on a video with you guys right now, and it really, really doesn't matter. But what I'll go ahead and do is put in my stop loss right here as well, which is going to be at about 62.7K. So that's just going to be my basic kind of invalidation. If the price goes this high, I don't want to be in the trade anymore. That's kind of my fail safe. And I'm actually going to go a little bit more aggressive. I'm going to go ahead and put 50% of my money into this particular trade, and then just go ahead and press sell. And that is it. It's very, very straightforward from there. It's going to tell me the price that I'm going to be entering, how much Bitcoin I'm using in this trade, and where my stop loss would be hit. I can actually go ahead and set that 10% profit target as well, right? So this price level is at about 51,700. So if I really want to automate everything and just kind of set my orders and forget about it, which in my experience is by far the best way to trade, I can go ahead and do that. And this is just gonna, it's just going to ask me to confirm everything that I've done over here. And that is it. If I come over here to my open orders tab, you can actually see that I've got everything that I've just done here in my opens orders tab, and all I have to do now is just go ahead and wait for the market to put me in the trade. You can see that on the chart. It's already put up here where I plan on entering the trade as well, which is absolutely great. So if the market does end up coming up here, basically all I'm doing is I'm saying that at this area of support, I actually want to sell some Bitcoin and I want to buy it back at a lower level because I think it's going to go lower, and I want to profit off that drop there. So this is actually something that you can do, quite often in the markets. I mean, there have even been times where I've been doing this kind of thing and made even 50% profit in a day sometimes, or sometimes it's taken a lot longer. Sometimes, those positions I showed you at the beginning of the video on Bybit, those positions I actually opened over a year ago now, and I just haven't closed them because they're still making me money, right? So why would I close a position? I mean, those positions made me over 2,000% profit, as recently as just 1 month ago. So, I'm not going to kind of take myself out of a position that's making me money, but at the same time, money can come quickly or it can come slowly using these methods. But whatever happens, it is typically going to be accelerated because leverage is being used here. So again, I've just got to really stress that this is super unsafe. Most people are actually going to lose their money doing stuff like this, and that's something that I make very, very clear to you guys. I mean, you really got to know what you're doing. It is one of the more dangerous ways to make money in these markets. But the way I see it, kind of no risk, no reward. I've been doing this for over 6 years. I've made some really stupid mistakes and I've made some absolutely fantastic profits. And I think on the whole, it's definitely been worth it for me. And by the way, it's not just about hitting those big home runs that I showed you earlier on in these videos, right? I mean, what you also have are much smaller opportunities to make money where, you don't have to make such big profits to really pull in huge gains, right? I mean, if we kind of stick with the same, 5x leverage with the same kind of position, I'll show you another one in just a minute. But, let's say that it's a lot more conservative. Let's say that I only close after the price moves by 6% in my anticipated direction. That's a 30% profit, right? 5x leverage times 6% move is a 30% profit. And if we go ahead and open up Google and we just kind of take a starting balance of, let's say, again, just $1,000 because it's easy. Let's see what happens when we apply a 30% profit to our holdings. We managed to get a $1,300 balance. But if we do that twice in a row, then our $13 actually becomes $1,700. So that's a very big increase already. But if we do that for a third time in a row, we've actually more than doubled our money. And this is how the math works out every single time. You'll actually pull a 2.2 times gain every time you pull off 3 of these little moves in a row. And again, just to kind of put it in perspective, these aren't that hard to do, right? Even in downtrends, if you're kind of looking for, one of the key things we were talking about on this particular YouTube channel was this chart pattern here, which I think a lot of people weren't paying attention to, but if you were subscribed, you're going to know that we were looking at this. This was a very obvious bounce zone that we were looking at in the market here, and again, just kind of looking at, the same 5x leverage number, the market's already moved up by 8.5% off this particular price level. And again, just kind of running with that same figure there, 8.5 times 6, 8.5 times 5 is already a 42% profit, right? So the numbers get absolutely crazy. Again, just to show you how digestible these figures are. But, if 2 42% profits are pulled off in a row, you've already doubled your money. So it's even faster. If you pull off 3, the compound effect is just insane. Take a look at 5, for example. You've already pulled a 6 times return on your capital just with 42% profits. Now, obviously, realistically, are you going to get 5 of them in a row? No, that would actually be quite unlikely. But, is it doable? Is it digestible? Is it easy to understand? Hell yeah. It's definitely something that you can kind of wrap your head around, because all you're doing is putting a little bit of extra juice behind the capital that you're trading with, if you anticipate that you've got a kind of edge in the market. Now, let me show you a couple other ways to kind of identify these positions. And before I do that, I'm just going to go ahead and cancel my orders here, because this is not a demo account. This is real, and it's not actually a bad position. I just don't want to use tutorial funds for a real trade. I would probably trade something much larger than this if I was going to do it for real. But there are a lot of other ways that you can kind of identify where entries could be in the market. What I've shown you today is definitely by far my absolute favorite method, because it's the easiest to do. It does require you to be patient, but to me that's only a good thing. You don't really want to get in the trap of kind of trading too much or anything like that. You don't actually make more money doing stuff like that. Another way that you can actually try and identify, setups like this is just looking at kind of chart patterns, right? Something which I think a lot of people sleep on, but is so useful. We've seen this happen to the upside here beautifully, is that sometimes we kind of trend up and then we pause a little bit and then we continue to move up, and this kind of forms your typical bull flag pattern, right? We actually did it down here as well, where we kind of pause a little bit and then we continue to move up here. So you do form these patterns on the downside as well. We can see this very clearly if we start to zoom in to, let's say the 5-minute time frame while the market was kind of actively trending down. We did already have quite a few instances of this taking place, and all it kind of requires you to do is kind of identify where the market kind of forms these patterns, and then see that actually this is probably something which is repeating over and over. I think by this point you've seen 1, 2, 3 instances of this happening. So the third time that it happens here, you might actually be able to expect that if we kind of fall below this support zone that I've just very crudely drawn, if we start to rip, then we're gonna rip. If we start to dip, then we're gonna start dipping very low. And sometimes we form these on larger time frames, sometimes we form them on smaller time frames. Here is a kind of larger time frame of the same general kind of thing happening. We got some wicks going up and down, but it doesn't really matter, because what it means is that the price is kind of, just trading sideways in this particular range before getting ready to continue that trend, right? I mean, each of these kind of lines here, this line right here, or this line here, or this line here, this is the kind of continuation of the trend, and that's the real juice that you want to be trading, and that's what you can actually start seeing coming when you start looking for these kind of patterns, right? So the market does them all the time. Again, sometimes they're a little bit bigger, sometimes they're a little bit flatter, but you can just segregate the market super easily, and you can see that between these moves is where the real price action happens, and this is where you make the money. So super cool. At the end, sometimes it's going to look like it's going to dip again, and it won't dip, and you're actually going to kind of go short, and then your stop loss is going to get hit because actually the market has moved up, right? And in this case, it would be a pretty easy stop loss. I'd probably just put my stop loss right above this candle right here, and I'd probably enter as high as I can. So that's it's not even a 1% move. Again, with 5x leverage, I'm losing 5% of my money, right? I mean, I'm not losing sleep over that at all, and so eventually you're going to kind of get it wrong, but that's completely okay, because as long as you're kind of being sensible, you're not trading with too much money, you're exercising good risk management, stuff like that, you're going to be okay. You're going to win some, you're going to lose some. That is part of the game. We're just looking for weighing the probabilities on our side as much as we possibly can, and then kind of running with it from there. So super cool kind of strategy, super doable in this market. It's something that I've kind of done for a very long time in this market now. Many of you guys have been doing it as well. So, I think that is absolutely fantastic. And of course, Blowfin is a phenomenal place to be doing this. So definitely check them out with the link in the description below if you are interested in signing up to them. However, if you want to trade on the best of the best, then Bybit is still the best in the game, in my opinion. They've been my favorite for, 4 or 5 years now at this point, a very long time. And I don't really see that changing anytime soon. I do think that Blowfin is a phenomenal alternative. That's why I'm not shy about talking about it. But Bybit does kind of still retain a very special place in my heart. So if you want to check them out, then you can find their link below as well. And regardless of what you trade on, whether it's Blowfin or Bybit, if you use my link in the description below, you're going to get thousands and thousands of dollars in free capital that you can trade with, when you start depositing and trading on those platforms. So that is super cool. With that, ladies and gents, I hope you've enjoyed this one. Let me know what you think about this video. It's kind of different to what we usually do, so I'd love to get some feedback from you guys on it. If you have appreciated it, do me a favor and smash those likes up. Double check that you are subscribed to the YouTube channel, of course, and let me know what you want to see next. Cheers.